yes. There we are once again, but now on Sunday. So I got a calm Sunday. Of course, some stuff to do, wedding stuff and other stuff as well. But hey, here we are. It is 1 p.m. and I was thinking, like, am I going to do a live stream? Am I going to do a YouTube video? But you know, like, price is pretty much going sideways. It just broke the double bottom as well. So I was like, you know what? I think a live stream might actually be more interesting than another video, because of course stuff is, you know, it doesn't change too much in the weekends because of the range. But at least we can share some thoughts about what we see here locally on the chart. So guys, good morning, evening, afternoon, wherever you are from the world. And that is also my first question. Where are you from? Where are you from? I'm from the Netherlands. I live in Gouda, which is a place in the Netherlands. That's where I am staying. But where are you from? So we have Watty, welcome. Stays on 2K16. Nice silver badge behind your name, my man. Moin, 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 moin. Timo Romein, ook hier aanwezig. Wederom, goedemiddag. Goedemiddag, good afternoon, Timo. We are neighbors indeed, Stefan. Right, we are neighbors indeed. Germany and the Netherlands. Flotty here as well, probably clicking that button. I see the hearts floating. Wait, let me do this as well, right? Nice to see and hear you live. Always good learning. Thanks for that. Well, thanks for all the comments, man. I always love reading your comments as well. And you always do this as well, like the Netherlands, shake hands, AT. I think that's Austria, no? Or Australia, I'm actually not sure. Goedemorgen Erik, welkom. Welkom. Of ja, eigenlijk goedemiddag, hè? It is good afternoon in the Netherlands, as it is past 12. So, Watty from Bulgaria. Well, there you go. Austria. Okay, yeah, what's correct there? Austria. Christian M, born in Poland, grew up in Germany, live in Switzerland, and will retire and move to Thailand. Wow. He's been all over the place. But that's nice to see. It's good to have those experiences, right? Like, you know, I'm born in the Netherlands. My mom is French. Always went to France on holiday. I'm kind of like a global citizen for work, like as a global keynote speaker, which I am, like it's my own business. I travel the world as well because of speaking gigs across the world. So, you know, I tend to see stuff, and board member of the Global Esports Federation, our headquarters based in Singapore. So, and we are looking to relocate to the south of France not too long from now, maybe in a year's time or something, probably a little bit less. Belgium, there he is, Bert P, the one that told me about the daily naked point of control just below the range over here, between 26.9, 27k, also in the house. Ljubljana, Slovenia, Masha Knights, welcome. Lil Connor Yayit, the UK, Lobro, Where is this in the UK? I actually have no idea. India, well, we know India. Valier Zarou, welcome. Ah, vous parlez français? Oui, un petit peu. I mean, I understand and I can read French quite well, but speaking that needs practice, right? So Sri Lanka, war relaxation music. Can use some relaxation. Miami in the house. There he is again, Mike Romero, our Miami dude. He's back. He is back. Hey, in this live stream, right, what is the plan? Well, first of all, we're going to look into Elliott Waves, of course. We're going to go through some of these scenarios. Mainly one scenario because it went past the 1-to-1 fib time on the medium time frame. So that kind of like, you know, the double 1-2, it's going to become quite a problem now. For that double 1-2 with what we're seeing. So it's interesting to at least highlight that specific scenario. And we could just go through the different time frames, and then we go into chatting. I think trading psychology is always an interesting topic. So of course, throughout the chatting, we probably hit that topic a couple of times, and keep an eye on what is happening locally as well. Around Leicestershire, the Midlands. There we go. Still have no idea. For me, it almost sounds like I have an idea. Now, I know, you know, you have the UK, and then you have London. I know London. I'm not really familiar with any other bigger cities, and because I've only been to London, really, or in the area of London. So I need to up my game. Okay, so let's go through the different scenarios. Get back to chatting in a second. Let me actually move chat. Let's move chat to my other window here on my second screen, so I can keep an eye on what you are writing. And let's zoom out, right? Because if we go to the 4 hour, where is it? This one starts to become a problem now. Let's see, I can remove the double bottom. We took that one, remove the targets as well. So in the previous videos, you heard me talking about this vertical line, right? Which is important because this vertical line is the line of this wave 2 in time compared to the blue wave 2 in time. And in this bullish scenario, right, this is actually a very bullish scenario, we're looking for a 1, 2, 1, 2, and you want to see continuation, meaning that this blue wave 1 and 2 is a lower degree wave 1 and 2, should be shorter in price and time. By far most commonly, like how rare is it for a lower degree Elliott wave to be bigger in price and time than the higher degree Elliott wave? Doesn't make sense, right? Because we're talking about degrees. So this already over here, the second wave 1 being longer, gives doubt, right? It already lowers probabilities because it's about the rules of Elliott waves, and based on all those rules, you can make an estimation of the probabilities, not in exact numbers, but based on the rules, you will know like, hey, you know, this is invalidated and that and that and that. And then eventually in your head, you go like, well, lower, lower, lower probabilities, which increases probabilities of other scenarios, no? So this already lowered the probabilities, but if we now look at this wave 2, well, either the low is already in of this wave 2, and this is the first impulse, so wave 1 currently in a 2, and then look for a 3, that would be okay, even though the 1 is still too long, or we come down once more, which at the moment seems most likely, not necessarily directly, because, you know, I do keep an eye on the flat scenario over here, which looks like this. So then on Monday, we basically take the highs, for example, move to the downside, take the double bottom, and then we take it from there, right? Either we get a bounce or we do not get a bounce. That's up for grabs. But that is currently locally in this range, the higher probability scenario. But that leads us to this wave 2 being too long, because now if we would move down to, let's say, the golden pocket here, which is sitting around 26.9, 26.8, which is a common target for a wave 2, the problem becomes that then this wave 2 is going to be longer than the higher degree wave 2. So then the second wave 1, lower degree wave 1, is longer than the higher degree wave 1, and the lower degree wave 2 is longer in time compared to the higher degree wave 2, which completely does not make any sense anymore when we talk about degrees, which, you know, really lowers the probabilities of this being a double 1-2 bullish scenario. Now we still have this scenario over here, which is for me also yeah, it's just in general that the bullish scenarios don't look great, as explained in my videos as well, very concise and short, of course, where here the same problem, the 3 in a contracting diagonal, 3 is longer than 1, it's not allowed. Expanding structures are very rare, right? Expanding diagonals. If the low over here is not yet in, and we are going to find a move to the downside still, we get a problem. Because this little red triangle over here is the only area for a wave 4 in a contract diagonal to like make the low of 4. You can only make the low of 4 over here without hitting the lower trend line. The moment you hit the lower trend line, a diagonal is invalidated, a contracting one, not an expanding one. But an expanding diagonal is so rare that it is never a preferred scenario. So really for the bulls, the scenarios are becoming very limited, because either you have, of course, a 1, 2, 3, 4, 5 regular impulsive structure where wave 1 and 4 do not overlap. That is okay. You either have a 1, 2, 1, 2 and then continuation, where the double 1, 2 preferably is a contracting diagonal type of shape, where wave 1 and wave 3 are impulsive structures. So you have a 5 zigzag in 2, or actually you can have any corrective pattern because it is a wave 2. So you have a wave 1, 5 wave structure, 3 wave. Then over here, the second wave 1 is another 5 waver, followed by another 3 wave, and then continuation. But because this wave 1 and 2 over here is the higher degree and this is a lower degree, you want this to be shorter, which therefore brings us, the highest probability being that a double 1, 2 is a contracting scenario, because the second or even potentially the third wave 1 in a 1, 2, 1, 2, 1, 2, each wave becomes smaller in time and price compared to the previous one because we go in lower degree, lower degree, lower degree, which then leads us to a big push. Right, which also at the moment is a bit of a problem, because this move here is longer in price than this one over here, so it doesn't look nice. So then you have the regular impulse 1, 2, 3, 4, 5. You have the 1, 2, 1, 2 continuation, and you have a leading diagonal. And these are the three options for the bullish scenario. So the regular impulse over here doesn't work. A double 1, 2 over here has low probabilities. The only potential scenario I have in mind is that this move by itself is a wave 1, followed then by a wave 2, and then you get another move up for a wave 3. So you get a very, very large diagonal. But yeah, that's way too early to call, and it's looking at how much time this structure already took. It's just way too early to call. Low probabilities at the moment, and everything, because the bullish scenarios have lower probabilities, it increases probabilities for another move down. This is the step-by-step approach. If you're new to Elliott waves, right? Step 1. Do you see an impulse from the low? Step 2, do you see a double 1, 2? Right? Step 3, is it maybe a diagonal? These are the questions you have to ask yourself. And then you just go through the rules one by one. Okay, we made a pivot over here. We made a low. Are we bullish? Well, you need a bit of price action, right? You need some information. Over here, you're like, hey, let's go. But then this stuff happens, right? And as price is giving you new information, probabilities will change. So these are the three that you want to check. Do we have an impulse? No. Do we have a double 1, 2? Low probability, because the second lower degree wave 1 is longer than the first. Also this wave 2, if we come down once more, is longer than the higher degree wave 2. Doesn't make sense. Do we have a diagonal here? Also doesn't really make sense, because wave 3 is longer than wave 1, meaning that now we have to talk about expanding diagonals. Wave 2 is quite short for a expanding diagonal. Most commonly is the golden pocket, which was over here. Also, if this is a 1, 2, 3 expanding diagonal 4, 5, usually wave 3 gets closer to the 1.618 extension, which is somewhere over here. So yeah, it doesn't look too great as well, right? Just does not look too great. What is important for the bulls, however, is 29K. Look, if you can flip 29K, that's when we might start talking about seeing new local highs here. Of course, price is then already here. But hey, we trade volatility, we trade price action throughout this range. There's many longs and shorts to be had, of course. It's not about getting an absolute banger 100x 5,000% wins. It's about the consistent smaller wins that you can make throughout the days, weeks, months, years that will make you a profitable trader. And sometimes you will have a big winner, right? And sometimes you will have, hopefully not too often, a bigger loser. If your risk management is okay, you shouldn't really have too many big losers. Keep your losers limited, but your wins, of course, should outweigh your losers, right? So even if price would be over here and start ranging, whenever there's a range here, maybe you see market structure change, bullish CVD divergences, RSI, whatever it is, can be a new entry, right? Could be looking for more upside. So that's no problem. That's no problem. We don't have to buy the low. We don't have to buy the high. We have to buy or sell somewhere in order to make our money as a trader. And therefore, we need a plan, a strategy, entry requirements, statistics. You have to act like trading is a business. It's not a gambling, I want to say gambling business, which of course is like an industry, right? We're not in the gambling industry. So it's about probabilities. It's like poker, poker, of course, poker can be seen maybe somehow as like also gambling, especially for people that just, YOLO. But the professionals, they are playing based on probabilities. And that's exactly what we want to do as well. We want to have an edge, put the probabilities in our favor, and then we trade our plan and over 100 trades, we're profitable, at least if you know your statistics. So the probabilities for this move up now, being a bullish move to the upside, is not looking very good. The probabilities are not looking very nice for the bullish scenario. The bearish scenario I keep an eye on is this one. Either, so this is the question. Either it's more like an ABC structure where this is the high already, and we're then looking for a move down. So because the probabilities in this range as it stands are still higher to go towards the double bottom, the way price moves to the downside and how it reacts to taking these lows and potentially finding support over here at 26.8 to 27K is going to be very important. Either you do find support and you go up for then over here Y in a flat X and Y being a zigzag in a 535, or you fall, and that's going to be a wave 3. Now more locally, based on what we see over here, and by the way, for wave Y, that target area is around 29K, right? 29.2 here, the blue box. Very, very interesting indeed. Now, if we look more locally, this structure, as mentioned in the video also this morning, looks like a 3-wave structure. Not easy to count this as a nice impulse. It's been a while since I actually showed you the potential impulsive counts here. So let me quickly go over it. Let me first show you what I've been looking for here. One of these scenarios, where is it? I have so many folders now. Oh, here, first move. So this is one of the scenarios, a 3-waver. The volume over here at the end is not too great, right? Because the volume moves up in a contracting ending diagonal. It's actually not what you want to see. You want to see volume moving down. Lowers the probabilities, right, of this being an ABC. But if we go to and look at impulses, it's quite difficult to find a nice impulse in here, and I'll explain why. So if this is your wave 1, 2, 3, 4, 5, then over here, this is your first wave 1. Then you have 2, 3, 4, 5. You can't have any different ending here, basically. The problem here is that, well, first of all, wave 3 is not the shortest, so that's okay. The problem here is your overlap between 1 and 4. Because if I put a horizontal here, you can see that there is overlap over here. The high of 4 sits there, low of 1. And that's the higher low. If I take this one, it's a clear overlap, right? That's not what you want to see in an impulsive structure. Can, of course, still be an expanding structure. So that's a lower probability, of course, right? Where this then is an expanding diagonal type of structure as an impulse, right? So the first impulse is an expanding diagonal structure. That's possible. It's just probability-wise not great, right? But at least it's something to consider because of the volume we have over here at the end of the move. Now, another structure you can have is a 1, 2, and then 3, 4, 5. I have seen this one sometimes. Let me actually put it on the chart here as well, because the problem here, this one is worse than the one I just showed is I think the best impulsive scenario that you can have in this move to the downside, because this scenario 1 and 2 is fine. Wave 3 here is the problem, the subdegree count of wave 3, right? Over here, 1, 2, 3, 4, 5 doesn't make any sense. If this is your wave 1, right, your wave 4, you have overlap between 1 and 4 inside wave 3. That's not okay, right? Not okay. So is there any other one like 1, 2, 3, 4, 5? No, those are the two options. So yeah, for me, it makes most sense then this is a 1, 2, 3, sideways 4, and then over here a 5 in also a bit of an expanding structure. For an impulse, that's the best scenario. Now that also means that the invalidation is here. This is the invalidation for price being an impulse over here. Interesting, right? So if this is your wave 1, then currently we would be ranging inside of a wave 2 for then a 3 to the downside. And as mentioned, probabilities in general are higher to look for this double bottom over here to be taken. So even though we might like probabilities here looks like a 3 waver, but it could be a 5 because of the volume, right? But in the end, the result is the same. Because if we look more locally in this structure, probabilities are at the moment higher to still take the double bottom before, you know, any potential move to the upside. So, of course, if you have a flat scenario coming over here in Y, let me actually put the range on. This one. So you have a W, you have then X, could be in over here already, right? That would be a nice end of X. And then you could be looking for a Y. Well, in that case, you're going to go down as well. You're going to be looking for the double bottom. It just all depends on the reaction you get over here, right? Either it's going to be a big smash and, well, you know, we might be looking for 1, 2, 3 for much lower prices. Or you do find support and then WXY, and you're going to be looking for a move back to the upside, or an A, B, and then eventually C, and you look for a move back to the upside, where 29.2K is important resistance for the bears as well as the bulls, by the way. But the bearish scenario, as explained, has a higher probability. So this is like the current thoughts. Now the probabilities more locally, as mentioned this morning, were higher for a move down. You don't really have to know too much about Elliott waves, but just remember this tip I'm going to give you now, which I shared this morning, which is about the 886. And up and up. Okay. So even though you're not counting this structure, you see that a fib pulled from the low to the high here gives a bounce on the 886. The moment the 886 is hit and you get a reaction to the upside, probabilities are much higher for this move to the upside to be a wave C or a wave Y, meaning it's part of a corrective structure. So the low on the 886 has a higher probability of being a B or an X for then a C or a Y. And therefore, the probabilities increase that this over here is corrective, and you will at least see the double bottom taken, which is what we have done now. We even had a little back test, retest over here as well, but you know, that's exactly what we were then looking for. 886 hit, yes, price moves to the upside, but it doesn't change the probabilities. Probabilities were still higher, as mentioned, for price to take the lows here because it hit the 886. Now the 886 is a rare target for a wave 2. So it is a target. It's just very rare for a wave 2 to retrace to the 886. And we play the game of probabilities. So based on probabilities, we know like, hey, 886 is hit. Higher probability we at least come down once more to take the double bottom because the 886 low is part of a corrective structure. This move over here is also part of a corrective structure, increasing the probabilities, right, that we go down. If you fly and you go into a wave 3, well, happens. It's just lower probabilities, right? Much lower probabilities. So by far most often, if the 886 is hit, think about a B or X. And if it then goes away from the 886, think C or Y, which also means you got to think we come down once more. And we came down once more, and what is now very interesting is this piece of the chart. Let me actually show it. So over here, you can see we have a little bit of a gap inefficiency, fair value gap, whatever you like to call it, right? It's been in the market probably since the very beginning the market existed. So it doesn't matter what name you give it. It's just a bit of a gap inefficiency, whatever it is in your case. So this is an interesting little, at least, area of support where actually initially I should have done this to the red candle. So it's been tested once, had a bit of a bounce, and now you're coming back, right? And you can see we tested it. We might range here for a bit. Who knows what happens, right? The thing is, the moment you like test this area for the second time, the moment you're now going to fall in and close candles in here, increases the probabilities you're going to fill the gap. You're going to fill the whole thing to at least 27.7. However, there's not too much support going on over here. Let me quickly check where the point of control is. Yeah, and we are now also entering the value area. So the point of control is down here, which is interesting. That's also where the support area is, 27.4, 27.5, right? So that's definitely an area of interest if price decides to continue falling. It is Sunday though, right? It is weekend, usually not really famous for impulsive moves. But at least we got to know our levels, support level over here. So I also wouldn't mind, by the way, to have this as a three-wave structure. This is your A, then B, and C, right? That is the Y scenario I showed earlier. Over here. So let me actually remove this line because it confuses people. So then you have X, W is in, X is in, and then you could have a Y, which is then an A, B, C. And then it's an expanding flat. 1, 2, 3 wave structure in a 3, 3, 5. This is then going to be an impulse to the downside, but it's part of a corrective structure. After this impulse down, you then expect a move back to the upside. So this is definitely not out of the cards. And actually for a Sunday, this is probably one of the better scenarios because it avoids an impulse to the downside and a very sharp move. It keeps the weekend ranging. So then this is your weekend range basically. And you just completed like maybe an A, then you go back up for the rest of the day for like eventually a B, maybe take this high, maybe not, you know, we don't know. And then you move down. For a flat, of course, we want to. For a flat, you want to see the high taken. But yeah, the bearish CVD divergences that we had have now played out as well. So yeah, downside was expected, got it. CVD is neutralized. And we got to wait a little bit for what is next. There is no bullish CVD. No, there's no bullish CVD. But at the same time, the bearish CVD already played out. So, you know, there's also no bearish CVD anymore. So, yeah, now it's just, it's a waiting game, no? We know the probabilities locally and on the medium time frame, as explained earlier. So let's see, let me remove this, clean up the chart a little, tuck, tuck, chuck, and then the volume profile. So this is, like, these are, of course, my thoughts, but from an Elliott Wave point of view, these are the probabilities in this piece of the chart and also the probabilities more locally, which at the moment is most interesting. It doesn't really matter if over here, like this, of course, looks like a 5-wave structure, A, B, C, D, of maybe 1, 2, 3, 4, 5, where this is then your low or this is your low. Doesn't really matter per se. It's either WX zigzag in Y or this is your low and you look for an A, B, C. But yeah, probability suggests at the moment that this move to the upside is, you know, lower probability of being bullish, higher probability it is still bearish, a bearish corrective structure. And also in this range over here, probabilities are higher. We're still going to eventually take the double bottom before seeing 29.2K. And if we do, we'll see if we continue down or if we get a bounce for a wave Y. And then a WX, A, B, C for Y, ending around 29.2 and yeah, seeing a move down. So yeah. That's basically the probabilities from an Elliott Wave point of view. And I do always like to say, especially in live streams, that I don't care where price goes. So I don't care if it goes to 30. I don't care if it goes to 1. I just trade price, right? So I'm not emotionally involved with Bitcoin. I don't care if it, you know, I trade Bitcoin because of the volatility. But I don't trade Bitcoin because of it has great fundamental backgrounds or stuff, right? I just trade because there's a chart, it has a price, and it goes up and down. But I don't care if it's 100K or if it's 10K. Yeah, I'm a trader. I trade the volatility. I'm not emotionally involved with, oh, Bitcoin has to go to 100K because X, Y, Z. Or to 1K. Because, you know, it's only nice if we go to 1K here, that's a great move, you know. Hopefully I'm short. If it goes to 100, I hope I'm long. So, yeah, these are the probabilities of what happens in this range from an Elliott Wave point of view. And yeah, seeing a bit more ranging in the weekend could definitely make sense. Did we also take this low, by the way? Yes, we did. So, bit of a swing failure pattern here. So, took the liquidity. hit this gap, right, as I've just shown you. So this could be a first structure. Let's see. 0.618. Oh yeah, this was a thing I shared earlier. Also for your information, over here you can see that price also hit the 886. It actually closed multiple candles above the 886, but it didn't take the high. So yeah, we go back to probabilities. The fact that over here price hit the 886 increases probabilities that everything coming after is part of a corrective structure, so in a wave C or a wave Y, and it increases also the probabilities that these highs will be taken because it's an 886 retracement. It lowers probabilities that this move up is a wave 2. Increases probabilities this move up is a wave B or a wave X. We will see how everything pans out, but that's the 886. It's just a very useful little thing. So yeah, it's very interesting, no? Very interesting, just casual weekend ranging stuff. Another thing, of course, is like trade the range until it breaks. It's the typical quote, I suppose, regarding Bitcoin or trading. Like 80% of the time Bitcoin is going horizontal. Of course, you have some sharper moves like over here, but in the end, you always have another range. One can always just trade the range until it breaks to either the up or the downside. So this is basically the bigger range. Oops, white. So yeah, interesting stuff. Let's have a look at chat, shall we? While we went over the probabilities. Good evening, Sri Lanka. Oh yeah, Miami. This is where we were. Glasgow. Dare I say UK? Glasgow. Welcome, John. What's up? Smash the likes. Hugo Roll Perez. Gracias. Welcome, my friend. There he is again. He was here recent, like I think yesterday or somewhere else, like earlier this week. Doesn't really understand maybe too much, or at least he can follow English, but he was waiting for the Spanish subtitles, which of course during a live stream I can't have subtitles. I need to finish the stream before YouTube can translate my English speaking, which hopefully is clear enough to get a good translation. Jason Moore, CME closed Friday at 28,160. So it likes to open CME at the same price Sunday night. Something to keep in mind for weekend trading. Not always. Yeah, that would be nice, because it could be nice to then have, as in the weekend, stay horizontal. We now hit this swing failure pattern gap. Could be your first three-wave structure. Move to the upside in a B and then see a C down. Over the past couple of weeks, the Asia Open on Monday has been quite volatile. So the first couple of hours can be very interesting. And if on this Sunday we indeed get a bit of a move up back again, market opens, yeah, it could be interesting. So the bullish scenario, by the way, micro, is we're in a wave 2, no? So then you have this as a WXY, because it has to be a corrective structure for then bullish continuation. But at the moment, if this over here is a W in a zigzag, Y is not allowed to be a zigzag in a sideways double combo. Also, if this is an ABC by itself, wave C is too short. It didn't hit the common wave C target. It did hit the rare, but it is rare for a reason, of course, between the 1 and the 1.236. So this is the common target for C, and then potentially an ABC. But as you can see, it came short, right? It hit the gray 1.618 here, but it's rare. It's a rare target. And then this has to be your wave 1, currently in a wave 2. 382 is a less common target for a wave 2. Most commonly is the 05 to the 786. That's the area of interest, where you can see the 786 has nice confluence with the support area here, 27.4, 27.5. So that is quite interesting. But it still means you're, based on probabilities of this then being a 2, you still expect price to go lower than where it is at the moment. So, but yeah, this over here doesn't look like a nice WXY. You can't count this as an ABC because a C has to be a 5-wave structure. So even if this is a 5-waver, you're then looking for this being B and then A, B, 1, 2, 3, 4, 5. But we don't have a 5-wave, we have a 3-wave. So in that case, if this is your A, you're still expecting B and then eventually another C down. Invalidation is taking this high. And in a WXY, you can have the high being taken before a move down. So that's here, right? W, X, and then wave Y, because W is then a zigzag. Y is a triangle or a flat. I would prefer a flat, which then is something like this. And this high could even take this high. For an X, it's no problem to take the high. It can still be corrective. W, X, Y, or sorry, W, X, and then wave Y takes the high with an expanding flat. So 3, 3, 5. So yeah, definitely interesting. But at the moment, in general, let's do a little summary. Probabilities is summary. Probabilities on the medium time frame, here the 4-hour, are higher, that this is a bearish structure to the upside, based on everything I explained in the beginning. If we zoom in to the more local range, probabilities here are higher. We're going to see at least a double bottom taken before any clear move either far up or far down. But you know, as I just explained, probabilities are higher to go to lower prices. But more locally here, probabilities are higher to take the double bottom. But that can happen in a flat. So be aware, right? Be aware. And then we have to wait and see if we get a bounce over here. If we get a bounce here, I suspect the highs to be taken. And then this being a WXY corrective pattern and then a continuation. For this then to be a WX and then an ABC for a Y zigzag. So then you have a flat in WX, double zigzag, and then Y is a 3-wave ABC. So it's a 5, 3, 5-wave move. And then over here, this is where we're looking for downside. This could be, I think, from a psychology point of view. There we go. The psychology scenarios. We back, right? Gotta love some psychology scenarios. From a psychology point of view, like trading psychology point of view, it could be very nice to have a W, X, and then a zigzag Y. And the reason why is this then is wave C of a flat, but wave C is an impulse, followed by a correction, followed by another impulse for a wave A, followed by a correction, followed by another impulse for a wave C. You know what I'm doing here? The bulls will count this as a 1, 2, 1, 2, 1, 2, or a 1, 2, 3, 4, 5, or whatever, right? But a bullish scenario. But this can very much be a WXY, WX zigzag in Y, where this move is a C, this is an A, this is a wave C again of zigzag. Yes, you reach the 29K area, but then this is the area of importance for a move to the downside, because at the moment, this over here has low probabilities to be a bullish structure based on the price action that we have over here in combination with all the Elliott Wave rules. Actually, we did Ethereum yesterday. Gustika. We actually went over ETH yesterday, so I definitely recommend checking the live stream. The live stream yesterday, somewhere in the middle, I think I went over ETH. You'll be able to find the chart. I think it's here. Watchlist ETH. I mean, ETH was the same conclusion. So wait, we are not on ETH. Oh wait, lol. But it was the same conclusion. Actually, ETH looked worse than Bitcoin because Bitcoin has a bigger move and the retracement on Bitcoin here is not as steep. Bitcoin is going sideways. Ethereum moved down. So, okay, so of course, yesterday on the live stream, I've done Ethereum, but for the Ethereum people here, let's go through what I did on Bitcoin. Do we have an impulse? Do we have a diagonal? Or do we have a double 1-2? That's what you wanna know. Now, for people that might be new to Elliott Waves, check the link in the description, the detailed link, which will bring you to this website. Loads of information, loads to study. It's an amazing source that I love to use. And if you want even more detail as well, then you can go to this website over here, also in the description. This one is called the Elliott Wave More Information link. And the one I just showed is the Elliott Wave Detailed link. And then I have one more simple one. Yeah, these are the two best ones in my opinion. So you can check these out. But from a low to the upside, there's 3 potential bullish scenarios. Impulse, diagonal, double 1-2. So in a nutshell, 1, 2, 3, 4, 5. Is this possible? No, because wave 1 and your wave 4, and then 1, 2, 3, 4, 5 have overlap. So it can't be a regular impulsive structure. That's invalidated. Then we have to think about a diagonal or a double 1-2. So a double 1-2 means 1, 2, 3, 4, 5. And this is your 1 hour. And then we have 1, 2, 3, 4, 5. And that's your 50. So green is the higher degree, wave 1, 2. And then inside the bigger wave 3, you have the blue count. So the blue count is a lower degree Elliott waves. And degrees are connected to time. So the higher the degree Elliott wave, the higher you go in the time frame. But because green over here is a higher degree Elliott wave count, you want the wave 1 and the wave 2 to be longer in price and time compared to the lower degree Elliott wave count. So let's get our tools out. Trend-based fib extension from the low to the high of 1 to the low of 2. Now what we see is that this second wave 1 is longer than the first wave 1. However, this should be a lower degree wave 1. So this is not what we want to see. We want it to be shorter in both time and price compared to a higher degree wave 1. Now let's see if actually the time also is a problem here. Well, it's about to. Which is, yeah. So almost this wave 2. So if this is your wave 2 in time compared to the lower degree wave 2, which is the blue one, the blue wave 2 is almost longer in time now than the higher degree wave 2, which is also not what we want to see. So this lowers the probabilities of a double 1-2. That's not what you want. It's not what we're looking for. So then we're looking at a diagonal. So a contracting, I mean, just by pulling the trend lines, you can already see it's not a contracting diagonal, right? It's an expanding diagonal. But just for the sake of teaching, that a contracting diagonal is then a 1, a 2, a 3, 4, 5, where trend lines should, wait, let me actually, yeah, let's start with the trend lines and go to the channel later. 1, 2, 3, 4, 5, where you also want wave 3 to be shorter than wave 1. Well, as you just saw with the double 1-2, that's not the case, right? That's not the case. Another like trick, if wave 3 is short enough, so let me actually do a little drawing here, where, wait, let's get the count back. There it is. If this is your 1, 2, 3, and then you have a 4 down, then what you can do is you put a channel from the high of 1 to the high of 3 to the low of your 2. And your wave 4, oops, I don't want the middle in here. And then your wave 4 is not allowed to hit the lower edge of the channel, because for a contracting diagonal, we want to see trend lines converging, right? The upper trend line and the lower trend line should converge to one another. A contracting diagonal is by far most common. All the expanding structures are rare. Expanding triangle, expanding diagonal, expanding leading diagonal or ending diagonal, right? Expanding, whatever expanding. So you want to look for contracting stuff, preferably. And if it hits the lower, so even though wave 3 can be shorter than wave 1, if the retracement then hits the lower trend line, a diagonal is also, contracting diagonal is also invalidated. Let me put the chart back. So over here, first of all, wave 3 is long, which means you automatically have an expanding diagonal. And an expanding diagonal, as just mentioned, is rare. Now, if we look at the target for 3, I mean, the minimum requirement is that it has to be longer than wave 1, but also the 1.618, which is this one over here. That's quite a common target for a 3, common, quote unquote, for a rare pattern. So, you know, this is fine, I suppose, for a wave 3. It's just that, you know, it's rare in general. And also in an expanding diagonal, wave 2 and 4 retrace deep. So those are deep retracement. You want to see a lot of overlap. So wave 2 over here, expanding diagonal, common target is between the golden pocket and the 886. And if we go to wave 4, the common target for an expanding diagonal is between the golden pocket and the 886. So of course the retracements are in those areas, but we always have to think, right? Yeah, okay, but you know, expanding diagonal is a rare thing, especially as a leading expanding diagonal. So this is the beginning of your impulse, and then you have an expanding diagonal. It's very, very rare. Also in an expanding diagonal, in a leading expanding diagonal, you want to count a 5, 3, 5, 3, 5, where this wave and this wave, so wave 2 and wave 4, are zigzags. Has to be zigzags or double or triple zigzag, like family, part of the family of the zigzag. Wave 1, 3, and 5 have to be an impulse in a leading diagonal. Now this move down looks quite impulsive. So with this move down, you would then expect another move up and at least another move to the downside, not taking this low, and then pump for a 1, 2, 3, 4, 5 expanding leading diagonal. it's just rare. So currently probabilities on ETH, you know, summarize this is how you get to work. I just want to show you the process of actually doing Elliott waves and how your knowledge can eventually get you to the probabilities, because now you know, you don't even know, like, you don't have to know exactly what the count is, but you just go through the different bullish scenarios and you're like, well, you know, probabilities are not great for the bullish scenario because of an impulse is not possible, diagonal is like wave 3 is longer than 1, and then you have an expanding leading diagonal, which is rare, and a double 1, 2 is kind of invalidated. Wave 1 and 2 are too long in price or time. So an expanding diagonal is left, but hey, an expanding diagonal, very rare pattern, probabilities are higher that this move to the upside is part of a bearish structure, meaning probabilities are higher for the low to be taken and lower prices to come. It's a little bit of so this is of course what I do in the morning, and 1 p.m. and 7 p.m. as well, of course. But I look at the chart. Of course, I have my scenarios, right? So I have already, because I keep it up to date every day with the videos, right? I basically do Elliott waves 3 times a day, but because I keep like looking at the chart, this is my process of looking for a bullish count, right? Like impulse, diagonal, double 1, 2, and then you just tick the boxes. And if you can't find either one of those being good, well, probabilities are higher. We're having a bearish scenario, and then you can try and figure out the bearish count. So I hope, Gustika, that that was good enough for you. AI World, welcome, by the way, AI World. I love using AI. Actually, we used ChatGPT today for our wedding website. I'm gonna marry in March, and I used a bit of ChatGPT in there. Not for the like the text itself, but for some activities nearby and stuff, nearby our venue. But and also just other stuff, AI related. I'm interested. I would love to learn how to trade using Elliott waves. Yeah. So hey, Chilfu, what's up, man? How you doing? How you doing? He back. He ain't missing live streams. Even on Sunday. He's back. Welcome, Chillfu. What's up, man? Nice golden badge there. Yeah, trading using Elliott Waves. So trading is very personal, right? Trading is a very personal thing. We are with many in the market. Everyone wants to profit, but building a trading strategy is very personal. So I use Elliott Waves as like directional bias, one can say, but I have a different trading strategy because I use Elliott Waves to know like the trend up or down, the general expectations, but my trading strategy is different. I do use bits and pieces of Elliott Waves in my strategy, but I don't trade Elliott Waves by itself, right, as it is. You can, which depends on your personality. Like, is Elliott Waves, are the rules of Elliott Waves good enough for you? Are the stop losses, the risk to reward, are these good enough for you? Will you only trade ABC zigzags, or will you trade only wave 2s, or do you trade everything? What time frame? But it's mainly about the rules. Like when you enter a trade, how will you eventually decide to enter, to exit, stop loss? And you can build a whole strategy around Elliott Waves as well. So of course, Elliott Waves has invalidations. Like currently, we have the probabilities. The probabilities are higher. We still see a move down. But are you then shorting here, or are you shorting here, or are you shorting here, or will you even short? But it's probabilities. Imagine price just does this, and then we flip 29k. Oh damn! Short, fail, stop loss, and then here you switch, and it could move to the upside. Of course, no financial advice. Elliott Waves can be very, very profitable, by the way. And sometimes I've been thinking like, hey, I might trade it, but it doesn't really fit my personality. Like trading Elliott Waves as it is, as the rules from Elliott Waves, doesn't really fit me as a person. So that is why I have a personal trading strategy, which has a lot of rules. Everything is like, there's no interpretation in my system. Everything has a rule. It's very, very systematic. And I have all the entry requirements. I need to check all my boxes. As long as the boxes aren't hit, I'm not in a position. It's as easy as that. So yeah, you can definitely learn how to trade Elliott Waves. But first, everything starts with learning about Elliott Waves. So if you want to know how to learn more about Elliott Waves, then in the description, there's 3 links. Those are just open websites where you can learn more about how to do Elliott Waves, right? And if you want to learn even more, then you can check out the gold membership on my YouTube channel, because that is where I've been already through all the different content, all the videos, all the different scenarios. So but yeah, it can be very, very nice indeed. Let me actually show pop. Which is here. It's whatever you like. You can also just study the websites, but yeah, we went through everything already. So from triangles to all my templates to zigzag, flats, WXY, FIB time, whole video on FIB time as well. So for now, I'm using smart money concepts, but not all of it, using order blocks and fair value gaps with some Fibonacci to know where to short and when to long. Sounds like you got yourself a proper strategy, man. And that is important, right? You want to find some tools that you enjoy using and build a strategy around it. So you combine different things, and eventually based on experience or statistics, how profitable your strategy is, where your target should be, where your stop loss should be, which eventually, hopefully, gives you a profitable long-term strategy. Because of course, like no strategy is 100% win rate, but as long as over 100 trades you're profitable, you're good. And there's like this picture where what should I risk reward table win rate? How do I find this one? Yeah, this type of stuff, right? Oh, here, this one looks quite clear. Leviathan crypto, okay. This is what's important here, no? So even if you have, so you need, like, you want to know what's your most profitable risk to reward ratio, and you figure that out based on statistics as well. And then what's your win rate? And based on your win rate and your risk to reward ratio, you can get an estimation of where you are, right? Are you profitable, break even? Are you not profitable? But with a 1 to 3, 30% win rate, you're, well, I guess on the edge. 1 to 3, 30%, you know, let's say 40%, 1 to 3, you're profitable here. But it doesn't mean that a 40% win rate means you're going to lose 60 trades out of 100. But over 100 trades, you will be profitable. So you got a profitable strategy. It's just that your mindset might play with you because of the win rate being low. So it might be mentally tough. Psychology-wise, it might be very difficult to have a 30 or 40% win rate. You might want to develop a strategy, for example, that is 60 or 70% win rate, but maybe your risk to reward is going to be lower. So your wins might be smaller, but your win rate is higher. It leads to, you know, a good amount of profit, but it will help you maybe more with your psychology because you're winning more trades. And now out of 100 trades, you only lose 30 or you only lose 40 instead of 60. It's a big difference. So actually this table over here, what I would like to, I don't know if anyone wants to do this, but you have a risk to reward table, you have a win rate table, but I would actually like to have, or a win rate horizontal thing, but actually I would like to add a psychology one as well. Because you can have a low win rate. Some people will be fine. They have a 30% win rate, 20% win rate, but they win like 1 to 10s, 1 to 8s. And they don't mind losing 80 times and winning 20. But me as a person, so for example, like I can't. My win rate is averaging 70 with a risk to reward ratio where my target is like 1 to 3, right? So that's my like goal. Yeah. And I like based on statistics. So, you know, I love my statistics. Yeah. I just track as much as I can. And so like I do track my statistics a little bit different compared to my actual trading because I trade a 1 to 3. That's my target based on calculations. It's my best profitable like risk to reward ratio. But you do see that over here, for example, if I trade with the trend, actually go to the right. Over here, 20 like retro 3RR 23%. But that means that out of 100 trades, 32 trades will not make it to a 1 to 3. But I do calculate them as a winner because of the strategy I have. So 32 trades out of 100 trades with my strategy will not reach a 1 to 3, but they will be at least break even. So they're also not a loss. You know what I mean? So yeah, it's whatever you like in your strategy. Inflation, yeah, it's a lot of stuff happening, eh? There's a lot of stuff happening. Awesome win rate. Thanks, man. Thanks. Yeah, I mean, you can always improve win rate, I suppose. It's just for my mental game, it's very important to have a solid win rate. There's not many setups a month, right? Like, what? So 8 to 20, 20 if you have a very lucky month. But, I can imagine sometimes it will be 5 or 1 a week. You know what I mean? The break evens are not counted. I only count wins and losses. So yeah. It's interesting, right? Having statistics. I'm just having a look here. So win, loss, break even. Of course, these are statistics, right? I still have to do in my new sheet because I tweaked the strategy a little in August, but still have to do August, September. I was on holiday, so you know. But yeah, it's win, loss, break even. Very, very interesting indeed. Chaka. But now, because I tweaked my strategy, I will I need to track statistics in a new sheet and start all over. Are you on X, on Twitter? I mean, I am, but with a personal account. I don't have any Koenz trading Twitter accounts. I'm only on Instagram. So I like to focus on YouTube first, at least, before going to anything else. So I am on Instagram, where I mainly post stories. I rarely post I rarely post Instagram posts. Holy moly, that's a tongue twister. But yeah. So I do put stories there, especially if I have to speak or if I'm traveling or if I'm on holiday. But I'm not on Twitter, YouTube, and Discord. I'm very active in Discord. You know, that's what I like. Do you trade? Yeah, I trade perp, not spot. I'm not a spot trader. I'm also not an investor, so I don't have any Bitcoin. Now, Bitcoin is, for me, it's a trading instrument. For me, that's a personal choice, of course. I don't own any long-term, I trade Bitcoin. So I'm really a trader, not an investor. I do have the book, though, The Intelligent Investor. I read through it. Quite interesting, but it's mainly about index funds, where you learn a lot about different things, but I learned the most about index funds. I don't know if there's other people here that learned about The Intelligent Investor. I'm not a fundamental trader. I'm a technical, 100% technical trader. I don't know anything about fundamentals, but you do learn over here about company reports, earnings, but also just about index funds and stuff. That's interesting. It's interesting. I like it. I actually got quite some trading books, but always love adding more. I typed "what's a tongue twister" and Google sent me here. Well, you're at the right spot. You're at the right spot. We had some tongue twisters just now. What's up, Mark? How you doing? Having a good Sunday. Having a good Sunday. By the way, thanks everyone for hanging around here on your Sunday. Who's going to watch Formula 1 later tonight? Who's going to win? Man, PS3 won yesterday. Hey, fucking hype. I like that. So, of course, Max, world champion, la-di-la-di-la, as expected. But what was nice is Oscar Piastri actually winning the sprint. Unfortunately for him, it's a sprint and not a real race. Lando got his hands full, hey, on the young Piastri. So, and of course, Logan Sargent parking it next to the track. Not surprised. The second safety car, man, a sprint of 22 laps, and you had 3 safety cars, and I think 5 cars were out. You had Perez, Gasly, Hülkenberg, Logan Sargent, and Liam Lawson. Wait, I think that was 5. No, I think I made a mistake there. So, yeah, that's 5. Holy moly, what a crazy sprint. I actually wonder if they are forced now to have a a mandatory pit stop amount, like 2 pit stops or 3 pit stops. By the way, for everyone joining here, make sure to go, like, if you haven't seen the analysis part, go to the beginning of the stream where I go over Bitcoin and Ethereum for you as well. Because we're in the chatting phase now. Just enjoy spending some time with you all. Let's see if anything happens in Discord as well, by the way. Let's see what's being written here. Some analysis from everyone. It's very, very active. Linus, probably he's always enjoying seeing his charts, posting a lot. Let's see if we see anything. Keep it simple, my friends. The O5s. I actually have an interesting question as well, which is a question from Dario. So let's like, you know, I'm curious to your opinion. Oh no, wait, was not the question from Dario, was a question from Ismail. He's also on YouTube a couple of times, but it was a good question. So he had a very open question, right? He says, okay, there's something that confuses me. Who makes the real money, the investor or the short-term trader? You know, he said scalper, but short-term trader, probably also day trading included. I'm 41 years old. I think the investor makes the real money, but I'm not really sure. I see there are good scalpers here. The issue has been leaving me in a dilemma for a long time. What is your opinion? What's your opinion? Goedemorgen. Goedemorgen. I think we can do a Dutch stream even soon. Now we want. But there's many Dutchies here. What's up, Redewiri? Welkom. Goed dat je er bent. Phil, Elliott Wave, you need to know the exact lows and highs, but you use Coinbase spot chart. Does that affect your analysis when trading perp? I mean, Elliott Waves, I don't need to know the exact lows and highs, because there's always synergy between the charts. However, I use Coinbase because it's most accurate for my trading strategy, which is why I use the Coinbase chart. I trade on BingX, so I like link in the description if you want to know more. But I trade on BingX, but I analyze Coinbase because my strategy on the Coinbase chart I don't know, somehow the process of my strategy, checking the boxes, works best on the Coinbase chart. I actually checked it with different charts, and you know, eventually Coinbase came out best from a profitability standpoint. So even though that's actually an interesting question I got in Diamond earlier today, which I haven't answered yet. So I'm not sure if some diamonds are in here actually. It was a question from Sander. Sander, are you here? So Sander wrote in Diamond. He wrote like, hey, you know, you analyze stuff on Coinbase, you're trading on BingX. There's probably going to be a price difference. And that's correct, right? Sometimes you are $20 up or down on BingX, right? The chart on BingX might be a bit up or down. Same with Bybit compared to the price of Coinbase for Bybit traders. Bybit is $10 lower at the moment here, right? So yes, there's a little bit of a difference, but in the end, it all evens out because sometimes you might just get wicked on the BingX chart, your stop loss might just get hit and price moves into your direction. You're like, yep, you know, too bad. But also sometimes you do not get wicked on, let's say, the BingX chart, but you do get wicked on Coinbase. So, hey, and then, I'm still in, you know. So, and also my strategy, because of the way my strategy is developed, it's, you know, of course, sometimes you have luck, sometimes you have bad luck. It's just part of the game. But in the end, it all evens out into profitability long term, and that is what you want. So, you know, yes, if I enter, for example, if I would have entered here with the stop loss above, maybe on BingX, my stop loss is a little bit larger percentage-wise, right? This is what would this be? 1.63. Now imagine on BingX, it's a little bit longer. It's a 1.9. Well, I don't calculate my position based on the BingX chart. I calculate it based on Coinbase because that's just how I do it, funny enough, right? So yes, my loss is going to be a little bit bigger. But at other times, the Coinbase chart might have a 1.64% stop loss, while on BingX the high is going to be a little bit lower. So yeah, it's sometimes you get wicked, sometimes you don't. Sometimes your stop loss is a little bit bigger, sometimes your stop loss is a little bit larger because price here on Coinbase is here, but imagine on BingX it's here. But I calculate my stop loss based on Coinbase. But now instead of a 1.63%, which is the calculated loss, so that is, I always trade with a 1% loss. So this is a 1% loss, but if BingX is trading here and then I enter on BingX over here, well, my loss is less than 1%, but sometimes it will be the other way around, where this is the Coinbase level price, this is the BingX level price. I enter over here, stop loss is the same because it is calculated based on the Coinbase chart. And now my stop loss is a little bit bigger, so I will lose a little bit over 1%. But in the end, you know, it averages out. I don't make a big deal out of the differences between the charts and the platforms, because you got to think like long term, right? That's what we got to think long term. One trade, yeah, you know, something might happen, but long term, it's fine. Same with the targets, of course. Imagine just as an example, right? Let's write this over here, because you know, imagine someone's entering now. Enters the stream, he sees this thing on the chart, he's like, holy moly, he's short, I go short. You know, no financial advice, this is an example. So same with the targets. No, on Coinbase, imagine you entered over here as an example. Your stop loss is going to be whatever, it's going to be above the high. Imagine you have this scenario and you're going to trade to the point of control, the target box. Very nice, 1, 2, 3. Now in this particular scenario, you enter here on like the coin. This is the Coinbase chart, and this is then the particular setup on Coinbase, right? In this scenario, but on BingX, your short entry might be a little bit lower just because of the difference in price on the chart, which means that instead of a 1, 2, 3, you have a, what is this, 1 to 2.5. However, the target is the same. It's not like, oh, this is a 1 to 2.5, so I'm going to extend my target to a 1 to 3. No, I take the target and the stop loss and everything from Coinbase, right? But sometimes BingX will be over here. So this would be the entry on a Coinbase chart, but this is my actual entry on BingX, stop loss here. But now my risk to reward ratio is 1 to 4, almost 1 to 5. Target is still the same. So yeah, this is, you know, you can see that it will fluctuate. Sometimes prices are higher or lower, but in the end, it's all quite close to one another. And yeah, it's look, for the scalpers, it might be a problem, right? For scalpers, it can be difficult. But I'm not a scalper. I'm a day trader. I trade on 15-minute. I have a whole strategy with entry requirements. I have 9 different rules, like boxes I have to tick before I even enter a strategy. As long as these are not ticked, I don't enter. So I'm not a scalper. So I don't have the problem of really trying to make profit out of a $20 move or a $100 move, right? I'm looking for bigger moves. So yeah. Okay, yeah, so we have some answers. The trader makes more trading between levels, but the market at long term can fluctuate going up and down. The investor doesn't always get the best of it. The trader does. That's a nice answer, actually. Well thought through over here. 4.2. What do you mean, AI? Sivarama Christian. I've noticed a lot of scam wicks on Bybit. Roger. Yeah, the wicks, like Bybit has quite some wicks, but that's also interesting. So Bybit over here took this wick, and it also took this one. But that's interesting because probability-wise, when that happens, probabilities increase, other charts will follow. Also, the Bybit wick is very long, so you expect it to be filled, which adds to the probabilities of actually having another move to the downside eventually. Also here, the fact that this low got taken on Bybit, but not on many other charts, increases probabilities these doubled bottoms will still be taken. So my answer based on the question that was asked in general chat. So AI World, thanks for answering the question. And also Anup, what's up? Welcome, smash the like button. Yeah. So I said over here, right? First of all, I like the question. And I said it depends, or for me personally, I think it depends on your portfolio size. Of course, also what you say, AI World, it definitely depends on what asset you're investing in, right? If you invest in Bitcoin at 30K, it goes to 69K, you're very happy. And then you're at 15K 1 year or 2 years later, you're like, damn, right? So of course, you know, that's not great. But in general, depends for me a bit on portfolio size. Investing makes sense when you got a big portfolio. But if you have $1,000 to your name, having a solid strategy and day trading is more profitable short term, though it's possibly higher risk, right? And psychological stress. You have to take psychological stress into account compared to investing. You can build your account and eventually have more money to then put into investing. So you earn money with a smaller account. As a day trader, you try to build that account quicker than an investor would do, most likely. And then you can use the extra money to then invest later if you have a bigger portfolio. Yeah, when you have a smaller account, trading makes most money. If you have a bigger account, investing can make life-changing money. Meaning, life-changing over here means sit on your arse and your investment pays for your lifestyle, so you have freedom to do what you want and you don't have to trade to stay alive. So, yeah, in a nutshell, I suppose. So it was an interesting question, I think. Very, very interesting indeed. Let's see what's happening here. Yeah. Continuing the weekend range at the moment. We wigged this low over here as shown at the beginning. Hit this gap once again. But yeah, it could be nice for a flat 3-wave structure, maybe finished. Go up again, flat. Go for the double bottom. So attractive, right? The double bottom here, up. There you go. Oh, that's interesting. We have a little order block over here. And there are bullish divergences with this little order block now. Look at the right. Oh, wait, you can't see it because of my webcam. 1 second. So over here on the right side, put my webcam away for one little bit. You can see that on the right side, the chart just went below my horizontal cursor line. So we have a minimal bullish CVD divergence here on yellow. From this order block, we have a higher low on price, but a lower low on the CVD. This one. The target would be this high. Could play in the hands of a expanding flat scenario, which, you know, I think is still a great move. Copy link. Actually, I will post this. There we go. And now price moving a little bit to the upside. Oh well. Very nice. So took the low, swing failure pattern, moving to the upside, and see what happens. Continuing the weekend range as is the expectation. And this is like, you don't really, the moment we go all the way down here, I'm not really fond of a flat anymore. But, you know, throughout the weekend, we could have a first structure, second structure, third structure. But this is still quite short though for a wave C. If this is, let's say, an A, let's see, W, let's put on the WXY. It's not really respected too nicely. And if this is an A, B, C, then C is short. Because this is your most common target area for C. Bit of a push. So if we do this from the low to the high, expanding flat targets. Hey, we did hit. Let me put this one in the folder, CVD folder. So we did hit the common target area for an expanding flat. Wave B, sorry, expanding flat wave B. Oh. Mm-hmm. So you could still have like an A, B, C and go down once more. Let's have a quick look at the target. The area of interest. If price continues to the upside, and we're looking at this being a flat. Wow, that's a small. This is your most common target area. Between 21,189, oh, sorry, 28,189 and 28,203. But for next, this is a less common target area for a wave C. So this is between 28,1, 28,15. I mean, let's just say 28,1 to 28,2. For a wave C, if price is going to have an impulse to the upside. It is weekend though, so you can see like moves are not, it's not going too quick. This was at least a decent move, but it stops very quickly and then you range again. So yeah. But at the moment, this move is a bit short for a wave C. So either if it goes down a bit further, it could be a C and then a 3-wave here. For a WXY, the most common target is also the 1 to the 1.236, which is also just down here. But this low here did hit the 1.236, this one, taken from the low to the high. It's a wave B area. A bit early to call. But at least we had like on the 5-minute, little bit of bullish CVD divergences on yellow, but that's was only visible on the 5. Take the red candle, look at the CVD here in yellow, and you can see that, you know, the line is hovering below the horizontal cursor. But this has played out already. So, you know, it's already played out. So now we're back to neutral CVD environment locally. And in the end, we are retesting, backtesting, whatever you like to call it, this area here. As well as, of course, it's simple resistance, support resistance flip, I suppose. So, and you have this order block. That one is actually quite important. Little order block over here on the 15-minute. Definitely want to pass this one. So I think we just actually hit it. That's an important little order block. No bearish CVD divergences at the moment. Is possible ABCD, sorry my English, AB is CD, 4 hour. You're talking about harmonics, which is definitely not my specialty. ABCD, so he talks about this. So I don't really know what is this. ABCD. Okay, yeah, I see. So I think he speaks about A, B, C. I have no idea what I'm doing. I don't know harmonics. So I mean, I've read about them, but I've never studied them. So I don't know the AB is CD. Let me actually write to this guy. I don't know. A, B is CD. Yeah, we don't use it. In Elliott waves, we only get to D in a triangle because then you have A, B, C, D, E. But we don't have a C, so this is harmonics knowledge. Because in Elliott waves we have ABCs, that's a zigzag or a flat, and then you have the ABCDE for a triangle, but we don't use D without the E. Yeah, it's in harmonics. Yeah, so en ondanks de Elliott no usamos ABCD. Tenemos ABC un zigzag de plano. O tenemos, what is tenemos? I don't know. El ABCDE un triángulo. Pero no tenemos escenarios en los que tengamos ABCD y termine D. Whoa. Ta-da. Yeah, harmonics. Yeah, it's like pleasure, my friend. All good. Hugo roll Perez. Hopefully Perez does a bit better this race. He was unfortunate in some way yesterday, but he should have never started so back in the field, so far back, right? But yeah, harmonics. I never really got into them because I know Elliott waves. So yeah, can they complement each other? Yes, but I guess if you are starting to get very good into one of them, you kind of like, you don't really need the other one, but it can complement each other. But yeah, I prefer just sticking with Elliott waves. I like to keep things simple. Of course, Elliott waves by itself is a complex method. But I like to only think in Elliott waves and not also including harmonic theory. Where's my... There we go. So this is your target area for a C. This is a B. So or this has to be a WXY. Yeah, definitely something to keep an eye on. You really need to collab with Andy. He translates to Spanish. You do the Elliott waves, Andy the harmonics. Yeah. He can translate Elliott waves for the Spanish audience. And if he knows harmonics, that's good. I don't know harmonics, so we can complement each other. Vlad, Adrian, Anka. Well, you have an ABCD in Charles Lindsay's Trident strategy. I have no idea who that is and what the Trident strategy is, but yeah, I can imagine in some, you know, it's not in Elliott waves. It's not a Elliott wave pattern, but of course, it can be used in different waves. It's a 3-wave strategy, but it's not Elliott waves, so it's a different strategy. ABCD is not an Elliott wave thing, which is probably why it's called Trident strategy and not Elliott wave. So it's a completely different way of analyzing the chart. Yeah, it might be before Elliott, but I don't use I don't know the Trident strategy. But that's also why everyone has their own way of trading, right? So it doesn't matter if people use ABCD or ABCDE. Follow, at least depends on what principles. If you follow Elliott waves, there's no ABCD structure. You don't have ABCD. You only have ABC or you have ABCDE. But not just an ABCD. But there might be other strategies out there which do have an ABCD, but it's not Elliott wave, so it's something different. So then you have the Trident strategy or harmonics. Harmonics do use ABCD. So yeah, it sounds like the Trident strategy might look very similar to harmonics, because in harmonics you also use the ABCDE, like you use this stuff over here, cipher, ABCD pattern, those type of things. But you don't use that in Elliott waves. But this is why I also think, and that's like I always enjoy, like in general, everyone should always respect anyone else's trading strategy. Like, who cares if it's Elliott waves, trend lines, patterns, order flow? It doesn't matter if it's simple, complex, as long as that person can make profit, it's good. And everyone has a different personality, uses different tools that he or she likes, and one should always respect it. So, for example, with so one of the bigger YouTubers, right, of course, is ICT with SMC trading and stuff. Now, it's not my thing, not my cup of tea, not my way of trading. But for many people it is, right? Which is good, as long as they can make profit. Some people have their own personal developed strategies, like myself. My way of trading is not copied from any other person. So it's all my own tools together, and it works for me. Yeah, we should always respect someone's strategy. So the Trident strategy could be interesting, but ABCD is not in Elliott waves. It's actually the 0. Yeah, but like I know what you mean. If you put an ABC on the chart, then this is the 0, and then you have ABC. But still, we don't use D, right? So we don't use it. We don't have D. In Elliott waves, there's no D. You only have ABC and ABCDE, following also what I have above. Of course, you could say you have over here then your A, B, C, D. This is then your ABC. But the problem is, in Elliott waves, we don't call it a BCD. We call it an ABC. So it's not Elliott wave theory when you follow the official rules. But I do know where you're coming from. But it's not Elliott waves. It's not Elliott waves. Okay. Well, if we take a fib from where the order block is positioned, we are at the golden pocket. Yeah, so there's not too much to go over in the chart. The analysis part was at the beginning of the video. Of course, we're just like observing what price does, but it is a Sunday. Usually no big moves in the weekend. So I think everyone that we still have some stuff to do for the wedding. Need to do some other work-related stuff as well. For my other business, keynote speaking. Christoph Waves, what's up? How you doing, man? Good to have you around here on this Sunday. Is it possible to have... Is it possible to have an X, Z in Y and W? In a larger zigzag. What do you mean with an XZ? Is it possible to have an XZ? So a larger zigzag is an ABC. And then inside a larger zigzag, wave 2 and wave 4 of a zigzag. So a zigzag is, of course, so I guess I kind of get it. So you have a 1, 2, 3, 4, 5. That's your wave A. Then you have any corrective structure over here. As a correction, right? This is your corrective structure. And then you have another 1, 2, 3, 4, 5 to the downside. So your any corrective structure, what happens in here, this can be a WXY, this can be a WXYXZ, this can be a flat ABC, this can be a zigzag by itself, can be a double zigzag as well, can be even a triple zigzag. And then also wave 2 and wave 4, and a triangle, because this is a wave B. So any corrective structure in wave B. And then in the zigzags, a zigzag is of course a 1, 2, 3, 4, 5. It's an impulse, correction, impulse. And in an impulse, wave 2 and wave 4, wave 2 can have any corrective structure but a triangle. Wave 4, any corrective structure including a triangle. So yeah, in a wave 4, you can have a WXY. In a wave 2, you can also have a WXY. Based on probabilities, in a wave 2, you tend to see either most commonly a zigzag, second most commonly a flat. And in a wave 4, most commonly you see a flat, or you go towards the more complex structures. So you go towards like WXYs, which also explains the rule of alternation in Elliott waves, where wave 2 tends to be short in time, a deep retracement and simple tends to be a zigzag or a flat. And wave 4 tends to be shallow and long, which explains either then a flat over here or the WXY scenarios, or double zigzags, for example. So, a double zigzag is actually sharp. So more like the WXY, WXYXZ scenarios. Is it possible to have WXYXZ in a Y and a W? No. Good question. So if we are looking for a wave W is a 3-wave structure, but yes, you can, but not in W. So if this is your wave W can only be a zigzag, or it can be a flat. So these three, so if this is your W and then X and Y, wave W is a zigzag or a flat. Wave W cannot be a WXYXZ by itself, but inside the flat or inside the zigzag, you can have a WXYXZ. In a zigzag, that would be in wave B or wave 4 or 2. It's very rare. WXY, by the way, WXYXZ is a very rare corrective structure. And in a flat, you're talking also about a flat is of course, a 3 let's see, let me do 3-3-5 wave move, where A can be any corrective structure, B can be any corrective structure, and then you have a C up. However, a WXYXZ structure is usually quite horizontal, so you don't really see this too much, like being part of an A or B or C, but it can be. So it can't be, you can't have a WXYXZ inside a W and then expect another X and a Y. You can't have a WX and then a WX and then a WXYXZ in a wave Y. That's also not possible. At least based on the rules, like we can't really say not possible because it's always probabilities. But based on the Elliott wave rules, wave W is either a zigzag or flat, and wave Y is a zigzag, flat, or triangle. And in a sideways Dumble combo, wave W and Y are not allowed to be the same structure. And in a sharp WXY, which is a double zigzag or a triple zigzag, wave W and Y are the same structure, and even Z in a triple zigzag. So hopefully that answers your question, Christoph. Mr. Christoph Waves. It's a good question. It's a good question. A nice question regarding the Elliott wave rules as well. Okie dokie. Okay, everyone. It's time to do some other business-related things and also wedding-related things. So, hey, on this Sunday, it is a Sunday. I'd like to thank you for being here on your Sunday. Hopefully, you also spend some time with your family and your friends, or walk with the dog, or enjoy the weather, or whatever it is. Be with your loved ones outside nature instead of only behind the charts. But hey, maybe that's exactly what you love doing. The charts can feel very relaxing at times, or very stressful, the market. But enjoy your weekend. And yeah, I'll be seeing you tonight, because 7 p.m. is going to be the macro and high time frame update that I will be sharing with all of you. So tonight is another macro and high time frame update. Every weekend, or every week I should say, 7 p.m. on Sunday. The fish, just the charts. That's nice. I mean, I have my alarms on in the weekend. I know what I'm looking for. I have my setups prepared in case price comes to me. Then I will take the trade. So yeah, I'm always involved with the charts, unless I'm with friends and family. But the last weekends for me were very busy. We had lots of stuff to do. Friends over, family, friends. This is finally the weekend after we came back from holiday, 3 weeks South Africa. My fiance is South African. This is the first weekend we actually have no plans. So we just do some stuff for a wedding. And I have still some business stuff to do as well. Yeah, casually working a little bit while seeing what price does. But I always enjoy being live. So thanks, guys, for being here. Enjoy your Sunday. Thank you, Mark. The fish, good luck as well today. Hopefully making some profit on this Sunday if you get a nice scenario. And for everyone here, once again, thanks for being here. Thanks for spending time on your Sunday. Hopefully you have a great day. Tonight, 7 p.m. Central European time, macro and high time frame update. And after that, it's going to be tomorrow morning, 7 a.m. for another lower time frame update, right? So let's see what price does over the last couple of hours of the weekend. And we'll see what happens tomorrow with a new week, which, by the way, also has some news. So, hey, we look forward. We might get some volatility on the chart, right? Let's see. So everyone, thanks for being here. See you at the next one, right? Bye-bye.